China's exports fell in October after months of front-loading by Chinese exporters to beat U.S. President Donald Trump's anticipated increase in tariffs on Chinese goods. The October customs data showed China's exports declined by 1.1%, the worst performance since February, reversing from an 8.3% increase in September. The fall in October exports missed a forecast of 3% growth in a Reuters poll. Chinese shipments to the U.S. fell 25% year-on-year, as compared to a fall of 27% in September year-on-year. Chinese shipments to the EU grew marginally by 0.9% year-on-year, from 14% growth in September year-on-year. Chinese October shipments to Southeast Asian countries were stronger, at 11% growth year-on-year, but have also fallen from 15.6% in September year-on-year. Market experts said the sharp fall in China's October exports was from months of front-loading in anticipation that Trump would increase tariffs after November. Trump had paused higher U.S. tariffs on Chinese goods in August to just 30% until mid-November, which was a second extension from the first extension in May. Jiang Jiwei, chief economist at Baoyan Capital Management, said it appears the rush to ship goods to the U.S. ahead of tariff hikes subsided in October, according to a Reuters report. Chinese goods now face an average tariff rate around 47% after the Trump-Xi meeting on October 30th, above the 35% level that some economists say wipes out Chinese manufacturers' profit margins. Experts also said that Chinese export growth in Southeast Asian nations may continue to fall. Exports through Vietnam to the U.S. will decelerate once the front-loading is over, and we're there. So I think it's going to be much tougher for China in the fourth quarter, which means it's going to be tougher in the first half of 2026 as well, said Alicia Garcia Herrero, chief economist for the Asia-Pacific at Natixis. Exports have been one of the three key pillars of China's economic growth, and the Chinese Communist Party now wants to move away from export to focus on increasing domestic consumption for the next 5 years. As announced during the fourth plenum meeting in October, China's household consumption currently accounts for 39% of GDP, according to Asian Development Bank, which lags behind U.S. consumer consumption of 68%.